Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you?
To the moon, baby, to the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. We're both back in the house. It's good to have the fam back together. Fat Man Zoom, why don't you do me the honors of hitting up the starting five?
Starting five, we have Tiger's Edge, Wakarna Weed, Philip Stroh, Sean Ethier, and Lost One. You guys are our starting five. Good to be back, people. Good to see you. Welcome to Only Chaos. If you haven't been here before, this is our flagship content. It's Stock Watch Sunday. We're focusing on what's going to happen this week in the market. Make sure you guys stick around. We got a lot of good stuff to talk about, what we expect from the Fed, what we expect from the overall market. More importantly, Brad is going to give us his top 5 stocks on watch this week. So make sure you hit that thumbs up and enjoy the show. What's going on?
Man, it's been a weekend for sports. Since I started like really getting into F1, today's race was crazy. It was wild.
I don't even know what F1 is. Is that Indy racing or something?
Formula One racing.
What does that
Much
mean?
different than Indy racing.
What does that mean?
Formula One?
Yeah, what's that?
Formula One
Is that like what Dale Earnhardt used to do? Is that NASCAR?
That's NASCAR.
What's Formula One?
It's open wheel racing.
Okay.
Fastest drivers in the world.
What's open wheel? Come on, man, break this down.
It's where the tires are like it's a chassis or the frame of the car.
Yeah.
The wheels, there's no cover over them.
So who do I
open
know in
wheel.
Formula One?
You should know Lewis Hamilton.
Okay, yeah.
So he lost today for the first time in 6 years. He won 6 years in a row.
Yeah.
Championship. Lost today, and it was very controversial.
So are these the same as NASCAR drivers, or they're just totally different?
Much different, way different. This is road racing, so a lot of the times it's like in a city or it's like
so it's like
track.
Indy, but different cars.
Kind of like Indy.
Because isn't Indy sometimes in cities?
Yes, but these cars are way more sophisticated, like technically, like just the best of the best vehicles, the best racing, period, like in the world.
Nice.
So it was actually pretty exciting, pretty good stuff. If you haven't seen the Netflix documentary, I encourage you to check it out. You probably would like it.
Which one?
The Drive to Survive, F1.
Oh, okay.
F1.
Did you like the Schumacher?
The Schumacher documentary was great.
Yeah, it was good.
Yeah.
I watched
his son's racing now in
Oh, really?
Formula One. Yeah, not doing great. But
Speaking of documentaries, I watched on my flight home. I watched the Anthony Bourdain documentary, which was awesome.
Yeah,
it was really good. Well, that is what's going on in sports. What else is going on in sports?
It's not looking good for the Ravens. I'll tell you that.
They'll be fine.
It's like the JV teams out there playing at this point.
Yeah,
there's not many starters left.
I mean, I don't care if they lose because like they, like they're hanging in there with their team. Like they just need to make the playoffs and get in.
Yeah.
I don't understand what that play call was on the last play.
I don't either.
That was one of the dumbest play calls I've ever seen.
I literally said that. I was like, why are you're making a throw right at the line of scrimmage?
If you're a Ravens fan and you don't question the play calling, this is not the first time I've brought this up.
Yeah.
Very questionable play calling. I don't have an issue about anything. Like if they lose or not, they're going to get in the playoffs. I wouldn't be worried about any losses when you don't have Lamar Jackson. I would be highly concerned about their play calling.
Yeah.
And I don't know who's like, that was one of the dumbest play calls. And I was just like, it was unbelievable.
Like you recover an onside kick, which never happens. And then you squander it with that. Like,
yeah.
Pretty disappointing.
Yeah, it was. Yeah, it is what it is. But I think I was actually surprised because Lamar didn't the tackle didn't look that bad. I don't know. Did you get news on what happened? They said his ankle, right?
Yeah, they were actually pretty hush hush about it. I haven't read anything since the game, but said it was his ankle. That's all we got.
Gotcha. So back to stock market.
Fat Man Zoom's just came back from Brazil.
I know.
How was it?
It was awesome. It was phenomenal. I went to a island off of Sao Paulo, which was called Florianopolis. It was there for a wedding. First half was like wedding stuff, and then the second half was exploring the island and kind of doing our own thing, which was awesome. We stayed in an Airbnb treehouse.
And I mean, it looked like a legit treehouse.
Yeah,
but it also looked pretty damn amazing.
I mean, the view was phenomenal. And I eloped. I'll be honest.
I know people are gonna be like, "What do you got on?"
I'm just gonna get it out of the way. I eloped. She's watching. She's not mad at me anymore for the last thing I said. Just kidding. No, it's no, I didn't elope. This only fit on this one finger. All my other fingers are too fat. This is the Oura Ring. Have you heard of this thing?
I have. I didn't really. I mean, like I know it's kind of like having like an Apple Watch without the being able to tell time and do all the other stuff with it, essentially, or like a Fitbit kind of deal.
It's waterproof. I keep it all the time. I wish I could put it on a different finger. I may just wear it for sleep. It's an activity tracker and a sleep tracker, but the data it gives you is pretty incredible, especially like, so it'll monitor heart rate. It'll monitor activity. It'll do the same thing that like, the watch does. Whereas like after, being idle for 45 minutes, it'll like vibrate or whatever, get you moving. So that's really cool. But I got it honestly for sleep tracker, and the stuff it does with the sleep, it'll tell you REM, it'll tell you how long it took you to fall asleep, it'll give you a sleep score, say how restless you are, and so that's been pretty cool. And sleep's like one of those things that I'm trying to like focus on. But yeah, I mean, this is only the second day I've been wearing it.
Let me know how it is, because I've actually been interested in it too, because I keep seeing like commercials and stuff. CNBC loves this thing. It's all over that. So.
They just came out with a new version. This is the last version, but I will say I haven't used the Whoop or the Apple Watch, which I'll eventually get an Apple Watch, but it just feels less. I'm sure it feels less cumbersome.
Yeah,
like rather than having something actually on your wrist,
right?
It's less cumbersome. So we'll see. But let's get into the stock market, shall we?
Let's do it.
So I want to talk. Well, let's start with, what do you expect from the stock market this week? What are you looking out for? What do you think is going to happen in the market?
I think that we're in for another great week. Honestly, I mean, we had a huge correction, through Thanksgiving and right after Thanksgiving. Lots of fears surrounding around Omicron, and I think there was, some people that were concerned about the Fed also being a part of the pullback in the markets. When really, once people started, and Dr. Fauci, Scott Gottlieb, a lot of the medical professionals came out and said Omicron isn't necessarily as dangerous as the other variants that came before it, and the vaccines seem to be pretty effective against them, and we haven't heard of any serious hospitalizations out of this too. So the stock market just went through the roof. Pfizer came out and said, therapeutics are going to work against it as well. So everybody was super excited about that, and that's what brought the market back up. You would think, though, that if the Fed was also still looming over everybody's head, that the market wouldn't have been as reactive. And it just seems as if we went right back to where we started before Omicron came about, and we're headed towards new highs. Now, the CPI numbers came out on Friday, and the market still went up, which is also kind of like an indicator for me that I don't know if whatever the Fed says is necessarily going to bother anybody, because you would think with those CPI numbers, the highest that we've seen since 1982, didn't, flinch the market. Then I don't know if anything the Fed's going to say next week, unless it's something crazy, right? The Fed just like, oh, we're just going to stop, buying up on junk bonds tomorrow.
Yeah.
I don't know if the market necessarily responds. And really, if you look over history, when the Fed starts to taper and interest rates go up, the market still goes up. It just really matters what you're in.
Yeah.
And that's when it starts to really become a stock picker's market, rather than just being in these crazy high multiple, high flyer type stocks that aren't making any money.
Well, you know what? I'm just going to get right to it then. Well, then what about Rocket?
Yeah.
I mean, it's got a freaking PE of 5. It's profitable.
Yeah.
It's like, what about Rocket?
Rocket would be a great candidate. I think that Rocket's more or less a value stock.
Yeah,
that recently IPO'd. Like it's not a growth stock.
Yeah.
You know, it is involved in tech, and I can't explain to you why Rocket's down here. It really makes no sense to me. It really doesn't. Yeah, to your point, the PE is 5.
Yeah.
It's just mind blowing.
Like, I get it. Like Clover, we've talked about to a certain extent, maybe Penn, lots, but like Rocket just, it like baffles me.
Yeah.
Like what's going on with that. But with that being said, and yeah, I mean, without getting into the top 5 stocks, like what type of stuff or any specific stocks that you're really looking for?
Yeah, I mean, it really comes down to, and I don't necessarily have to go into anything specific. If you're looking at stocks that make money every quarter, they report positive earnings, they have a relatively low PE relative to the S&P 500. So the S&P 500 sitting around 24, accumulatively as far as forward PE is concerned. So if you're way above that, there's a couple of tech stocks, quite a few tech stocks that are way above that, and aren't making any money, then those are going to continue to get crushed, right? We're looking at Roku that got hammered, Peloton got hammered, still getting hammered. Some of those stocks that got us through the pandemic, and there's probably a lot of you guys that are watching that just started trading during the pandemic, haven't been through an environment like this. So it's going to be really important to understand what you're in and where the market's going to go when interest rates go up.
Yeah. So I wanted to ask about, I mean, I think the one stock that people automatically go to that's kind of bucked the trend is Tesla.
Yeah.
I mean, Tesla, according to what you're saying, should be in big trouble.
Well, I mean, it's down, what, 30% from its highs?
It was at what, 1200, 1280?
Yeah, hold on. Let's pull it up. So we look at Tesla, and keep in mind though, too, that Tesla does make money. So
yeah, that's fair.
Let me pull that up.
It's down 16%, 17%.
Okay. So let's take a look at the chart here.
So
I mean,
1243.
This is interesting because they do make money. But you look at the forward PE on this, and it is sitting at 167, 168,
yeah,
which is pretty crazy. So here's the danger with something like Tesla. If Tesla comes in under expectations in their next earnings, for example, and they're not growing like a lot of investors expect them to, then this will get absolutely crushed.
Mm-hmm.
Because if they're not growing, then in an inflationary environment or an environment where we're going to see interest rates go up, that's going to probably result in a pretty poor performance. I mean, we look at back in the early 2000s, Microsoft, Amazon, Apple, a lot of these high flying tech stocks that were making money in an environment where interest rates were going up, they were flat for the better part of a decade. And so I think that we could potentially see that. I'm not saying that Tesla's for sure going to do this. I'm just saying it wouldn't surprise me if Tesla actually ended up acting like that in an environment like this.
Yeah, and I mean, I definitely think, I hate saying something's like different or exception to the rule. I think they definitely have some certain factors that play into that. Now, yes, it's 17% off the high, but it's still up 40%. The year after was up 700%.
Yeah,
so like, off the highs are a little bit more challenging.
Yeah.
In perspective, but that's one that I think, I think the Bears have sort of calmed down a little bit, because last year it felt like they're like ready. The Bears were just like, all right, we'll wait for it. I think, for Tesla, I wouldn't, a flat year wouldn't necessarily surprise me. It would surprise me like if you saw really like a tank of Tesla, only because there are a lot of catalysts that could be coming for it. And also, I think people like Kathy Wood are just waiting to load back up on it.
Yeah.
Like, people talk a lot about her trimming and whatever. The reality is, I think they're just cashing in huge on it, and then they're going to get back in big if it ever gets, drops down.
I agree. And we actually saw that Kathy Wood, did you just say this, that they reduced the size of?
No, I didn't.
So typically ARKK would have 10% of Tesla wrapped up into their portfolio and their holdings. And right now Tesla's sitting at 8%. And the next in line is Roku. And so, and actually I think the ARKK also could be in for a rough year, especially as the taper begins and we start talking about interest rates, I don't know if ARKK actually has a great year unless they start to make the rotation and getting into good quality stocks that are making money. Roku certainly being one that could continue to suffer with it being heavily weighted in that ETF. It may be pretty challenging for them.
Yeah. And but the thing about them is they're so long-term, like they've talked about this,
right?
Like,
yeah.
they're like, we're not trying to chase things or we're not trying to whatever. Like we're trying to see what wins down the road. So does it make more sense for them to continue to load up with getting stocks that they consider a discount? And because then when it does turn around, they're going to have huge returns. And I think that's a question for a lot of people's account as well. Like, do you, the obvious answer is like diversification, but like, if you have a long time horizon, like, do you get into some things that are kind of down and like, that will eventually catch up, that may be profitable 5 years down the road or whatever?
Yeah.
Do you do that? That's just a sort of a theoretical or rhetorical question.
Yeah. I mean, and this chart looks just abysmal.
Yeah.
It's pretty rough too. So this is the Ark Fund, flagship ETF for Ark. And this is just, I agree with you. Like their outlook obviously is a 5-year, outlook. So they're not necessarily concerned about what's going on next week or next month or the next 6 months. They're looking 5 years out. So the part for me is that there's a lot of people that look at this and they don't have that kind of time frame. They just look at what happened in 2020 and see that, well, the whole ETF went up 100%.
Yeah.
Got to keep going up. Kathy Wood's a genius. And it's not to say that she's not. It's just their perception of her in the short term is much different than what she actually communicates to investors. And if they don't get that, then it's going to be pretty tough. It's going to be pretty stressful for those people that don't have the same type of horizon or strategy as Kathy does.
Yeah. That's definitely true. I want to switch over really quick to crypto because you mentioned sort of the macroeconomic factors that are going on and inflation in general.
Yeah.
Crypto's been flat, beaten down a little. I mean, actually kind of down.
Got crushed.
But it's still holding like technical levels for the most part.
Yeah.
You look at Ethereum, you look at Bitcoin. We'll just stick to those two. Shouldn't those respond favorably, like with the news that's going on with the Fed?
No.
Why?
Because if interest rates are going up, that means inflation's coming down.
Okay.
So if the Fed goes and raises interest rates, that actually doesn't necessarily make the case for cryptocurrency being a hedge against inflation if inflation is being controlled by the government and the Fed. Now, that being said, I don't think what the Fed's going to do is going to be nearly enough to really kind of help with inflation. It will some, but the fact of the matter is that the government's still pushing out stimulus like crazy. I mean, the infrastructure bill, yeah, but the Build Back Better plan is going to inject another $2 trillion in the market that we don't necessarily need, especially given how well the economy is doing. So that level of liquidity could end up being more of a bullish case for Bitcoin. But I think that we're going to maybe see some volatility in the meantime.
Well, yeah, let me rephrase that because I'm not necessarily talking about like, I don't follow inflation that much, if at all.
Yeah.
But isn't inflation like highs like on the year, or am I wrong on that?
Yeah. So inflation is high. We just saw those CPI numbers. So the consumer price index is around 6.2%, which is the highest we've seen since 1982. So that's definitely a key factor. But if we're looking at Bitcoin in a stock market we're talking about what's going to be happening in the future, I think the reason that Bitcoin's been coming down has been because of the Fed being more and more hawkish on raising interest rates. And we've actually seen the 10-year go up as well.
Yeah.
I think if that conversation continues to happen, because if we look historically, that's what happened in 2018, where interest rates went up in 2018. And I would say that the Fed actually was a bit too hawkish, and that's kind of what caused the sharp correction in 2018. But that's when Bitcoin actually, if everybody recalls, 2017 was crazy for Bitcoin, went up to like 20 grand after being down like 2,500 or whatever, went nuts. Then 2018 happened, interest rates went up, and then Bitcoin had a more or less of a crypto winter, if you will. Like it came down to like $6,000 from its $20,000 highs or thereabouts. And so I think that we could see something similar. This isn't me being bearish on cryptocurrency. I just think that we could be in for a little bit more of a volatile ride going into interest rates and that sort of thing going up.
So where do you see, or how do you see like crypto moving in the near term?
In the near term, I think that we could see it probably settle out around. I was actually super bullish on this, obviously, and it kind of started to take a turn as it was reacting towards interest rates going up. I think that this could potentially be a real thing. So I think it probably like stays a bit sideways, maybe hanging around the $50,000 mark, unless something crazy happens. I think that's probably the more realistic approach to it.
Yeah. And can you pull up Ethereum's?
Yeah,
because I feel like Ethereum's holding up a little bit better than Bitcoin.
You meaning to put the comments up there?
Yeah.
Okay.
Yeah.
So yeah, Ethereum is actually up and still outperforming Bitcoin.
Yeah.
Actually looks pretty good here. So I really don't know. Like, it's interesting because it had been reacting with Bitcoin, and it hasn't seemed to have had the same type of correction as Bitcoin did.
You know, I wonder how much that has to do with the fact of people really understanding where the importance of Ethereum, how it's different from Bitcoin, and where it's going.
Yeah.
And you know, we've talked that Ethereum, I will say I feel like we've for a while now sort of like we were pretty early on like talking about Ethereum outperforming. Like when we first brought it up, it was kind of blasphemous that we were like, yeah, we like Ethereum. Bitcoin's cool, but like Ethereum's the one.
Yeah.
And now I think it's more like people are realizing like Ethereum is viable option, like maybe even better than Bitcoin. Although it's been outperforming it for over a year now, I still don't think Ethereum has had its time in the spotlight. I'm going to be honest. Like, I feel like Ethereum will still outperform Bitcoin next year. And if it gets the hype machine behind it, which sounds crazy because it's the number 2 crypto. I mean, I think the sky's the limit for Ethereum.
I think there's potential for that for sure. I kind of wanted to pick your brain on this too. Like, the argument gets made all of the time about how Bitcoin is this store of value.
Yeah.
And if I'm thinking about stores, the traditional stores of value, like gold,
Yeah.
you know, the metals and that sort of thing, where where it doesn't really move all that much. Still, you know, it's not as crazy volatile, but it is a good store of value because it does appreciate. Whereas Bitcoin doesn't necessarily feel like a store of value. And I think that a lot of people, that the bulls on Bitcoin really try to, like harp on that. Whereas you look at something that's gone down 30-40% over 2 weeks, doesn't necessarily seem like that would be something that would be a good store of value to me. Now, granted, it's outperformed literally every investment. Okay. You know, average return on Bitcoin's been what, 200% since inception. So, I mean, that's pretty wild. But just given the volatility it has, when the traditional definition of a store of value being something that's nice and steady, it's conservative. Just interesting to see that the argument still gets made that Bitcoin is it.
Yeah. I mean, I don't know. I think that's like, you know, people talk about digital gold. I think that's that's sort of like a loose comparison. And I don't know if I necessarily buy that. I mean, you're buying into scarcity. I guess maybe you could say when they get to the point that you've reached the max with Bitcoin, maybe then you see less volatility. You know what I mean? So and I think just the conditions of something that's early inception, you know, because you also think about like, I don't know historical numbers for gold, but like you think about the gold rush and sort of that idea. I think it's the same sort of sentiment where I would imagine that when you get to the point where all the Bitcoin has been mined, it's just a supply and demand game. I gotta feel like at some point it's then okay. All right, now let's like this. There's all that there is, and I don't know how much volatility there'll be, just because I feel like that's when potentially, if it's a store of value, that's when it'll settle out.
I think there could be a lot of volatility, especially if institutions in particular, the more and more institutions get in, if they just start dumping, because then they stop. I mean, there's a lot of hypotheticals we could put in there, but there's certainly potential for it to be volatile. We take a look at something like the GLD, which has been a, the ETF for gold, follows it pretty closely. And you can see that obviously it's been pretty volatile in this moment. This is kind of, we look at 2012, 2011, that's kind of where the heights of it were, but it hasn't been like crazy volatile since. It's kind of been pretty sideways for the next 10 years or so up until recently, when people were worried about inflation. And obviously the pandemic, of course, wreaked havoc. This is the monthly chart on this. So this is kind of what we're looking at. And obviously it's gone up considerably, at the start of 2005 to early 2000s. But yeah, I mean, we're back up to where we were back in 2010. So,
but gold's been around.
It's been around
since the late 1800s.
Yeah, so it's not. I'm not saying that it is something to own because it's going to do better than Bitcoin.
Yeah.
I'm just talking about store of value in a sense of like, if you don't know where to put your money and you're concerned that the dollar is going to get crushed or whatever, inflation is going to take hold, and the value of the cash that you have is going to continue to go down. People gravitate towards gold, whereas it seems like nobody's really caring about Bitcoin at this point.
Yeah, I'm trying to make the argument for somebody that feels like Bitcoin is a store of value. I think they would say you're not comparing apples to apples. If you're looking at 2008 to whatever, I think they would say, no, if you're going to compare 2007 to 2021, you need to look at Bitcoin 100 years from now.
Yeah.
You know what I mean? If you want to talk about Bitcoin now, like you got to look at gold in 1900. You know what I'm saying? Like, yeah, it's when it was just like this, not unknown thing, but this thing that everybody was hyped about, right? Like the gold rush, this is the Bitcoin rush, like the crypto rush. Like, yeah, it's the same sort of hype where people are like flipping over their lives for this Bitcoin. And it's not like, if there was a chart from 1890, what would that look like? It wouldn't look like a steady increase. It would be volatility. So I think that's the argument, is like, eventually I think people are saying Bitcoin will settle down, and those that have been in it, 30, 40 years from now, it's just going to have leveled out. And if you were an early mover, then you win. At some point, it's just going to be incremental growth. This is what my presumption is, just the conversations I've heard, is at some point it's just going to kind of settle out, and you're going to get incremental growth. You're not going to get the 200% returns. But as we know, with new things, with volatility, with speculation, there's a ton of volatility early on.
Yeah.
And we're still in the early innings of crypto.
For sure.
So that remains to be seen. With that being said, though, I think it's time to talk about top 5 stocks.
Before we get into that, though, guys, make sure you're getting to the description and clicking on ownthechaos.com. So every day before the stock market opens, we put out a list of 5 stocks that we think might make some moves that are worth watching before the market opens, and it's absolutely free. If you guys want to check that out and check out all the other services that we provide down there, go to ownthechaos.com. It helps support the channel, helps support the studio you see behind you. And we got about let's see here. I was going to check in on our numbers. We got about 115 of you guys hanging in, and only 37 likes. I feel like that's a bit on the weak side. If you guys could hit that thumbs up, we certainly would appreciate it too, if you guys are enjoying the stream. And let's get on with the show.
Yeah. So every week we bring top 5 stocks that Brad has on watch, speak about the catalyst, what to expect from it. So this week, what is our first stock that we have on our top 5 stocks?
So the first stock that we have is going to be none other than Adobe. So Adobe has earnings on Thursday. And this is going to be interesting. Let's go back to the daily chart here. This is going to be interesting because we just saw how DocuSign got hammered. Now, DocuSign makes money, and we just got done talking about, inflationary environment, interest rates going up, and that sort of thing. They got hammered because they missed numbers on growth. Their growth is starting to slow down a little bit, rightfully so. I think the comparison that people are trying to make is like 2021 to 2020, and so that is a little bit skewed. But I don't know. I think that Adobe could certainly be in a little bit more of a safe spot. Tech is still going to be volatile in an environment where we're going to potentially see a tapering and interest rates go up. But I think that that's going to present itself with opportunities. We look at DocuSign, and it just got absolutely hammered. Now, I will say that even with DocuSign being down here, the forward PE, so the forward PE on DocuSign is 70 times next year's earnings, which is still pretty ridiculously high. At least Adobe's is I believe 45. So it's still a little bit more on the expensive side, but not nearly what a DocuSign was. So DocuSign obviously was crazy overblown. So I think that even if Adobe comes in and slightly misses, we're not going to see the same kind of reaction. It'll still get pretty volatile. I could see it potentially coming back down to maybe like 550s, somewhere around there. But it's already come down pretty far down below from its all-time highs at around 699. Came down and tested that 50-day moving average. I actually like it here. I think that this would be one to own if it does continue to correct as a result of people reacting to interest rates going up. And of course, their earnings are this week, so that'll be interesting to see if they're continuing to grow.
Yeah. Stuart Castro says DocuSign is a one-trick pony. Danny Alvarado says DocuSign is still overvalued. And Darwin says about Adobe trades richer than Microsoft, has similar growth. It seems a little too rich for me. Yeah, perhaps. And what I'll say I'm just interested to hear about Adobe, regardless of the reaction or not. I'm interested to see what they play in the Omniverse. You know, like what's their role in that? Because I'm sure they will have a role in that. Also NFTs as well. That would be a consideration. Very underrated company, though. I think like they've been around. They do a great job. They're a clear market leader in what they do. I think their challenge will also be rate of growth in comparison to 2021, 2020, 21. But I think that that's just an opportunity because Adobe's not going anywhere.
No.
So a company I like that we don't talk about enough.
We really don't. And, like I said, I think tech is going to do well. It's just going to be the right tech. And I think that Adobe definitely fits that bill for being in the right tech. As far as the DocuSign comments, I actually think that DocuSign is going to do extremely well too. They're not just a one-trick pony, just to be clear. And tell me how many people actually are interested in doing wet signatures anymore. They're not. So this is just going to continue to be a thing for DocuSign. DocuSign will come back after it finally gets, close to what it should be valued at. My next one is going to be Ford. So we're through most of our earnings season, and Adobe is really the only one that has earnings that I was actually interested in, and I thought was worth looking at. But we got Ford here, and it broke out, had a monster breakout. If you guys caught the video I put out on Thursday night of last week, I mentioned that this was in a bull flag pattern. So technically speaking, it looked extremely bullish. And then old Bill Ford comes out, the great grandson of Henry Ford, and then buys $20 million worth of Ford, and the stock goes crazy on Friday. So the breakout is certainly here. I'm not sure what comes of Ford on Monday, but I would imagine that it doesn't actually have that much of a correction. I think that we could potentially see a leveling out, and I would be fine with that. So I actually loaded the boat on Ford. He, the CEO, Jay Farley, was on CNBC, was on one of Jim Cramer's specials, and Jim Cramer basically asked him if he was trying to overtake Tesla as the number one EV maker in the world, in the country. And his exact quote was, that he was a race car driver, and second place is the first loser.
Yeah.
So in other words, if you're not first, you're last. And I thought that was a pretty bold statement coming from him, just considering how much hype there is around Tesla. And honestly, I still think that Tesla comes out number one as far as EV makers are concerned. But I think Ford is certainly in that conversation to be number two. And maybe they do end up rivaling Tesla. Who knows? But all I know is that they're dumping a ton of money into EVs. And if we look at the comparison here to some of the other EV companies, this is extremely undervalued with the Ford PE of 10 compared to the likes of Lucid, who's sold a handful of cars. It's around, has a market cap of around $79-80 billion, which is well above Ford's market cap. You have Rivian, it's over $100 million, that sold 15 trucks. So, if we're going to give these valuations, which I don't think that Ford needs to be that crazy of a valuation, but I think that if we're going to give some of these other EV companies that kind of love, then I think Ford certainly is very, very cheap here.
Yeah. Let me just start with Jim Farley. Jim Farley.
Oh, did I say Jay Farley?
Yeah, that's
Jim
right.
Farley. Sorry.
Jim Farley. Jim Farley. You're wrong. There, you won't be first.
No,
Let's just clear that up. I know he has to say it.
Yeah, he's
No chance in hell.
No,
Ford is number one.
Right.
But second place ain't bad.
right.
Like, I mean, they were talking about what, 200,000 cars?
200,000 just at the Lightnings.
Yeah. Oh, that's right.
Just the Lightnings.
Or it was like they'd stop reservations at 200,000.
Correct.
And they were talking about doubling capacity. Sorry, I was in Brazil. I got Brazil brain. I'm
I
like
got you.
kind of rusty on a lot of stuff.
600,000 EVs that they want out on the roads within the next 2 years.
Yeah. Even if he's half right, that's still huge.
Yes.
Right. So I'm excited about the story for Ford. I mean, this isn't really topical, but like, where does GM stand in all this stuff? That's kind of my question.
GM is actually in good shape too. So this is another undervalued one. So we look at the Doge.
By the way, while you're doing that,
Yeah.
I mean, I've seen some Broncos in person. I'm really they're starting to grow on me, man.
They are nice. They are nice. I'm not. There's things about the Bronco that I don't like for off-road purposes.
Yeah.
But they are nice. They're very nice. I actually like the half doors on them.
Yeah.
They're pretty cool looking. So the 4PE on GM is 9.5. And they actually have a pretty sweet lineup as well. I mean, the Hummers sold out. The reservations for that sold out. And who knows how many people are actually going to follow through with that, because you had to put $100 down for it. But obviously, I'm sure some of that will not get fulfilled. But GM has a huge lineup as well. The only thing I'll say about GM is that they have had a lot more problems with their product than Ford has. And so that's why I continue to gravitate towards Ford. GM, the Chevy Spark and the Bolt have had a lot of issues with catching on fire, and don't really have nearly the type of features or capabilities as we're seeing come out from Ford. This Ford Lightning is supposed to potentially charge your house for 3 days. Like if you're out of power, you just plug it in. This is crazy. Like, and so I think that the investment that Ford's putting in compared to its competitors is much greater. I would say that if there's going to be a fight for second place, it probably will be Volkswagen and not GM. I think Volkswagen,
I agree.
Could potentially be fighting with Ford for second place.
I like their EVs, man. I like their EVs.
Yeah.
Yeah, that remains to be seen. So we'll certainly keep our eyes on that. But that was one we just, I feel like has been forgotten as GM. But Ford is, I don't know. Ford is like just one of those companies that if any company would do it, it would be them. They got a lot of brand loyalty.
Yeah. They've
been doing it for a long time. And, their story about getting through the crash and being, and the way they executed that, we know they're healthy, right? Like that, there's no question around that. We know they know how to run a business. And so we just see where Jim Farley takes it. But I agree. I thought he did a great job on Jim Cramer. And I think what really is going to happen is get these things on the road and start getting people excited about it. Then as long as it's a quality product, I think that's what kind of gets people really excited.
There's a lot of people that argue about, the issues that they have with the dealerships. Obviously there's an incurred cost there. The union side of things, there's incurred cost there that Tesla doesn't have to worry about. And, they're still selling ICE vehicles, which don't make nearly the amount of money as what Tesla does. But the interesting part about this is that Ford's also going to benefit from higher margins on EVs as well.
Mm-hmm.
Because of the demand, because of how much less it actually would cost. And they can mark these up much higher than what they could mark up an ICE vehicle. So I think that the margin, argument, it could probably not be a non-factor once we start to see more and more of these EVs come out from Ford. So I think that they actually will be competitive with Tesla.
Mr. DeSoto said, I mentioned Ford and GM a couple months ago and everyone here laughed. Now they're being spotlighted. I don't think that's a true statement because Brad's been on that a long time ago.
I got video evidence of over a year ago, me being bullish on Ford. So,
all right. So we shall see. What's the next one?
The next one here for me is Halliburton. So Halliburton, it was in the news over the weekend. They're working with Iraq and some of the I guess I don't know what the proper term is for it. The geographical oil fields that they're doing some exploration in Iraq with Exxon, and Halliburton is looking to take over some of that deal. So Halliburton and Exxon work in conjunction with each other. So Exxon is more on the exploratory and then production side, whereas Halliburton is more or less the company that makes the wells. They do the drilling, they do all the services side of things. So if you guys have heard me talk about this a lot, where I talk about the OIH ETF, it's the oil services. So the Schlumbergers, the Halliburtons, and that sort of thing. And then there's the XLE, the energy ETF, and that's where Chevron and Exxon come into play. So Halliburton and Exxon working together over in Iraq, continuing to I guess build out and spend money, spend capex on exploration. And so this is just another bullish reason for me to continue to be in energy. I have calls on Halliburton. My 27, I have $27 calls here. They're going to expire worthless. They expire this month. I'm not expecting Halliburton to get that high, but I really am happy with my 25s. I think that $25 is going to be very reachable by the end of the year, and going into next year, I think we could start to see that move towards 30, but I don't think it's going to happen anytime soon. That being said, though, we're getting ready to cross over the 50-day moving average, so we can certainly see another move towards $25, maybe even this week. So this is certainly one that I would take a look at. It's nice and cheap. It's still undervalued. It's very underinvested. This whole sector, just 5% of the market is comprised of energy stocks. So that just tells you how much money could still come into this sector, to this industry. And I think that happens as we get into the colder months, and we already are. But as it starts to get colder, I think this starts to become more and more of a thing. And despite the moves that we've seen in energy, I don't think it's over.
Sake of time, let's go on to the next one.
All right, so we have PayPal, and I think it's time to buy PayPal. I think it's bottomed out. We are 35% from the highs, a little bit more than that. And we talked about this, Fat Man Zoom. Remember when they missed earnings, and I had mentioned that there was that 180, 178 that had the potential for it to come down and test. Mm-hmm. I was actually surprised that it actually did come down that far, especially with the way that it had been moving down before earnings. But earnings weren't great, obviously. But I think that we finally saw the bottom of PayPal at 179. I got calls on this personally. And so I actually feel really optimistic about PayPal, and I'm going to continue to hang on to this one because I think that the sell-off here is just overdone.
Yeah, it's pretty ridiculous. Somebody actually mentioned Square 2, which we should just get as well, King of Jungle. But yeah, I agree, man. I think it's a huge opportunity. PayPal's been around for a long time. I like how they're evolving.
Yeah.
They're just becoming more mainstream in general with how we operate. So
yeah,
I love what they're doing as far as peer-to-peer. I think we're going to see a lot more moves as far as PayPal. It's just a good, solid company. So good one to go. King of Jungle, what do you guys think of Square? And I was kind of the PayPal fanboy. You were the Square fanboy. Yeah, where do you stand with Square?
Almost kind of switch spaces a little bit. Yeah. But so Square, what also known now as Block Inc.
Oh, that's right.
It's so stupid. But looking at this, I think also the 180 area could potentially be where it stops, but it's a little too soon to say that. I would like to see it hold this area, but I think that given how oversold this is the RSI down here, guys, on the daily chart, and it just looks ridiculous down here. I think that there's certainly it's worth a shot taking a starter on this and kind of seeing where it goes. I think. Just come down so far.
Okay, cool. What do we got to end it out?
Lastly, guys, the number 5 stock to watch this week is going to be MGM. We saw this bounce at the 39.5 area. It's holding the 200-day moving average as of last week. This is if the market's feeling optimistic about Omicron and there's no issues to worry about with travel and that sort of thing, then MGM, to me, in my opinion, is a steal here, especially as we're looking in an environment where we're looking at interest rates. And we've talked about this. I think that Penn National could potentially continue to be a bit volatile because they are reporting a loss still. They say they could be profitable, but the market doesn't care about that. I'm going to continue to hold on to Penn National because I still have, because of how I feel about the industry, and I just love the brand in general. But MGM is certainly one to take a look at. They are profitable. They have an excellent balance sheet, one of the best in the industry. And I think that MGM is poised to continue to rock and roll here given the correction that it had, and in the apparent bounce here at 39.5.
Man, I mean, Penn's also one that's been baffling as well. I love MGM. BetMGM. We have the MGM in National Harbor. You ever been to that one?
No.
It's actually pretty awesome. You should go. I think they just launched sports betting there as well. A couple questions I just want to get to real quick. Darwin Investors asked FedEx reports this week. They do report this week, I believe on Thursday, if I'm not mistaken. Do you
FedEx,
guys?
yes.
What did I say?
Sorry, no, I was just repeating.
Oh, do you guys have any thoughts on this one?
Yeah, so FedEx has been a real big head scratcher. Last time they had earnings, they didn't do great, and I'm a little bit nervous if I'm a FedEx holder. I'm bullish on FedEx. I think they're going to be fine. I love to hold them. Our very own Daniel Camarena is just all about FedEx. I think that this, in my opinion, is certainly a hold going into earnings. I don't know if I would be buying it going into earnings. That being said, I think they do crush it. It's just very risky if I was going to be. Oh, it's always a risk holding or buying going into earnings. But if you're buying for the purpose of playing the earnings, I think that this would be one I'd stay away from. If you're holding it, though, I think that you'll be just fine.
Shout out to Rajiv. What's up, man? Jeev,
Bro.
Appreciate donation.
Thanks for that, man. That's awesome.
And then somebody mentioned lots being at 52-week lows.
It's insane.
MH lot of 52-week lows, good entry point. I'm just gonna say in general, like, don't fall victim to if something's at a 52-week low that's the time to get into stock.
Yeah. I mean,
it is insane though.
It hasn't changed direction. It's gone in one direction since
One Direction.
Yeah. Since January of this year. So pretty much a year. For the whole year, it's gone in one direction, and that is down. Unfortunately, it has not changed at all. So is it cheap? I think it's relative. If you want to take a flyer on it, sure, but I don't know if I would be dumping a bunch of money in the lots. I have some, but it ain't anything that's worth talking about.
The other thing people ask is Drive Shack. Drive Shack just announced another one of their putter relocations. It has been beaten down as well. It's been a tough road.
Yeah.
We talked about the 240 level, and when that broke, that'd be a tough sledding, and it has been. My conviction hasn't changed on that. I haven't added to it. I did add a little bit to it, but I'm not adding any more to it. I'm just kind of hanging out. But there's going to be a lot of putteries added next year. Announcement for probably more. I think the key for them is really the profitability to start coming in for these locations, which their break even's better.
Yeah.
But at the end of the day, again, you have a company that doesn't have a ton of revenue.
Right.
And again, when you talk about sort of interest rates and what, companies that are profitable or not profitable, that's going to be a challenge for them and their growth perspective.
Yeah.
But I got to say, nothing's really changed for me as far as the Drive Shack is concerned. I'm just kind of sitting, chilling with that.
Yeah. There's this conversation about owning stocks that are profitable versus not. This isn't to say that you should just dump all of your stocks that aren't making any money. And Dry Shack for me is one of those. I have a small amount of stocks in my portfolio now that are not profitable, that are considered growth stocks, and Dry Shack's one of them. Airbnb is another, and I think that Airbnb is just going to be one that I continue to hang on to. And Penn National, of course. But looking at Dry Shack, we've talked about this from day one, that this was going to be an investment for us. And so I think that I'm going to look at this as a potential opportunity to just add to. This is going to be a dollar cost averaging situation. And I think we're getting to a point pretty close here to where I'm going to be doing that myself.
Yeah, there's a point where I'll probably get pretty aggressive with Drive Shack, but I think that's probably going to be when it gets back over $2.
Yeah.
But I mean, it's just it's another one that's still kind of silly. But I also think there's fear surrounding the COVID variant. I think that kind of hurt it a little bit.
Yeah.
So we'll see, but there's a lot of good stuff going there if that's a stock that you believe in. Rajiv says, I'm very tempted to add the Penn. Believe me, I look at it every day.
Yeah. Yeah. Penn is it's crazy. It's sitting down here at $48. It is pretty crazy.
But-
I got leaps on it though. I've been very clear. I have leaps out to 2023, so I'm just going to continue to hold on to them.
Yeah. So as we close out, I know somebody earlier had said we should do a video on, stocks that have cash on hand and low 4Ps and all that other stuff. We're going to have there's a lot of content that we're going to be talking about moving forward. Feel free to throw those in the chat or your comments. Bold predictions is coming up. Bold predictions for 2022 is coming up.
Yeah.
We'll certainly be talking about stocks, top stocks that we think are opportunities as well. So those are all on the radar for us. I am particularly excited about bold predictions as well. But also, guys, just like I mentioned this before, we're getting close to the end of the year. So start thinking about, tax loss harvesting, thinking about the account types you're in, right? Like you want to make great money. If you're not like, if you're like using like a taxable account and you haven't considered like self-directed retirement accounts, you're missing out on like 30% because you're paying taxes.
Right.
So, exploring those options, talking with accountant, Mark Kohler's a YouTube channel that I love. You may be listening to that. He talks a lot about advice about those certain accounts. I think that's one of the most underrated conversations about the type of account you have plays into the money you make. And it's going to be probably a bigger return than picking the right stocks.
Yeah.
So all stuff that you need to consider as well, especially now towards the end of the year. If you're not maxing out if you qualify for an IRA, if you're not maxing it out, you got to think about that. Obviously you'll have till April, but all that's a whole part of the game as well. We need to be considering.
Absolutely.
So that's all I got.
That's going to do it for us, guys. Again, make sure you're checking out ownthechaos.com. The link's down in the description below. Or if you want to become a channel member, you can click that join button next to subscribe as well. It just helps support the channel and the studio you see behind us. Thanks again for tuning in. We'll be back tomorrow at 3:30 p.m. Eastern time to go over what's going on in the market and maybe some of the moves that we made. If you guys want to check out what's in my portfolio as well as be in the Discord group, our private Discord group, again, make sure you're going down to ownthechaos.com and becoming part of the crew. We'd love to have you guys there. That's going to do it for us. As always, we'll see you before the bell.
Bye.
Bye.